Good morning, everyone. Marv Eisen here from Timeless Dollar. Today is Tuesday, March 23rd. Before we get into today's actions, let's see what happened on the economic calendar to see if there's any kind of announcements that is going to be market moving today. And today, March 23rd, current account deficit and new home sales. Neither one of these are going to be potential market movers. In CNBC, futures have backed off a bit or from their highs of yesterday. NASDAQ futures basically flat, up a little bit, but basically flat. 10-year treasuries have backed off interest rates back to 1.649. So that portends good for stocks. Let's get right into it. Today, the action is going to be based on what happened yesterday. Yesterday was a Monday, and in the absence of bad news, Mondays tend to be market raising. And yesterday, there was an absence of bad news. And so, right from the start, and I have two blue lines here from 9:30 when the market opened till 4 p.m., right from the start, market headed upward, retrenched a little bit in the first. This is a 5-minute chart, and we have 4 points between each horizontal line. But the market started up, retracted, but then went up with a vengeance. It was a little back and forth at the beginning, but if you remember that Mondays are generally good days in the absence of bad news, and you stayed on, you were rewarded with a almost 40-point gain from 39.04 to 39.43. Tremendous gain. And from 9:30 a.m. right up until just before 3 o'clock, the market was on a trend right upstairs, and if you had the faith, kept the faith, you would have been mightily rewarded, and particularly if you took my course, you knew what the fog of war move was, you expected it. And at 3 o'clock, market backed off, back down to, from 3 to 4, back down to 39.30, so backed off about 15 points in the afternoon. Now, for those of you who recognized the trend and hopped on and had a inclination to ride it the reverse at 3, well, good for you, but it was not a good call in terms of a low-risk entry. Why? Because from 9:30 to 3 o'clock, we have what's called a trend. And remember, the trend is your friend. When you spot a trend, ride the trend, don't buck it. If it gives you profits, great. Take your profits, smile, and forget about the back off. Don't try to hop on in the for the correction on a trend day. Spot the trend. That's always going to be your best bet. Okay, so what was the low risk entry on yesterday, March 22nd? The low risk entry was knowing that on Monday morning, the fog of war move will most likely propel the market higher. And if it doesn't, guess what? You're not going to lose much money, because by definition, a low risk entry is an entry where if it goes against you, you get out right away because you have a high degree of expectation. The market's going to move in a certain direction, and you follow your instincts, jump on, as I did. And if it goes against you, if the market had backed off here at 39.04, back to, let's say, 39.02, 3900, you could have gotten out right away without hesitation. Too many people, they jump into the market without considering whether or not their entry is a low-risk one. And as a consequence, market goes against them, they ride it down thinking for some reason that it's going to turn around in their favor, and it doesn't, and they end up taking a big loss. So anyway, today, Monday, Tuesday, March 23rd, what is the market going to do? Well, watch the market. Don't jump on early in the morning. Exercise patience. The market, the big picture. Let's look at the big picture for the S&P, which will eliminate the overnight nonsense. And here we are. We have a doji on the 21st. The 22nd, of course, the market was up, and it's likely to continue up based on the technicals over here. So it might be a good day, but keep your powder dry. Wait for the low risk entries. Anyway, Marv Eisen from Timeless Dollar. Thanks for watching, and I'll see you on my next video. Trade safe.